With this indicator, you can craft over 3 trading strategies. We're just gonna cover the 3 strategies that I came up with. The first one is the classic trend reversal strategy. Here we had a bearish trend, and then the market became overextended to the downside. The indicator printed a signal for a bullish reversal, and as you can see, the market did indeed move upward afterward. The second one is the trend continuation strategy with structural level breaks. Here we had a bullish trend, and then the market broke and closed above this structural high. At the same time, the indicator printed a signal telling us to enter the trade. As you can see here, if we had taken that position, the price would have continued moving upward after the signal. Ladies and gentlemen, the third strategy we're gonna go over in this video is retests of support and resistance levels. Here, the indicator labeled a support level. Price later retested it, only touching the level with a wick. A bullish candle was then printed, and if we had taken that trade, it would have been a profitable trade. This is the LTF Volume Microburst Bubbles indicator by Zeiierman, and it's designed to identify short bursts of unusually strong buying or selling activity happening inside individual candles. Instead of judging a candle only by its total volume, it analyzes lower timeframe candles inside of that candle and searches for volume spikes with enough directional strength to actually matter. In this video, I'm going to explain exactly how this indicator works, what all the different components mean, and finally, a simple trading strategy for long and short positions. If you happen to find value in this video, remember to leave a like. Well, let's get into it. Now, for this showcase, I'm going to explain everything using TradingView, which is the trading platform I'm going to be using in this video. If you haven't signed up yet and you want to use the same setup I'm using, there is going to be a link in the video description for you to sign up to TradingView. You can experiment with the indicator on different markets and timeframes, but for this strategy, I'm gonna use BTC USD on the 30-minute time frame from Bitstamp. Once you have your chart open, click on Indicators and search for LTF Volume Microburst Bubbles. Select this one by Zeiierman, and once you add it to the chart, this is how it's gonna look. Let's start with what the indicator is actually doing. LTF stands for lower time frame. So even though we're trading on the 30-minute chart, the indicator can look inside every 30-minute candle using candles from smaller time frames. It then compares its volume, the volume of those smaller candles, with a normal volume baseline and searches for unusually large spikes. But high volume by itself isn't enough. The lower time frame candle also needs enough directional body strength. This helps filter out situations where there was a lot of volume, but the candle was mostly wick or indecision. Qualifying lower time frame spikes are then separated into bullish and bearish activity and combined into what the indicator calls a microburst score. Positive scores represent bullish dominance, while negative score represent bearish dominance. The most obvious thing you're gonna notice on the main chart are these large bubbles. A green bubble represents a bullish microburst, which means unusually strong bullish lower time frame participation. A red bubble represents the opposite. It shows unusually strong bearish participation inside the candle. You'll also notice that some bubbles are larger than others. Generally, the stronger and more concentrated the detected activity is, the stronger the microburst score becomes. So, larger bubbles immediately draw your attention to candles where unusual participation entered the market. You can also see numbers printed above the bubbles, like this one, or this one, or this one. This is the volume text, giving you an easier way to compare the amount of activity behind at different microbursts instead of judging them only by their size. Below the main chart, we also have the Microburst Score panel. When bullish microburst activity becomes strong enough, you'll see a positive bar moving above zero. When bearish activity dominates, you'll see the score moving below zero. The indicator only generates a full bullish or bearish microburst signal once the score reaches the signal threshold that we define in the settings. The next component are these horizontal levels. When a qualifying first microburst appears, the indicator can project a level from that area and extend it forward. Bullish levels are green and bearish levels are red. These are useful because they give us a price level connected to the area where unusually aggressive participation entered the market. That doesn't automatically make every green level support or every red level a resistance. We will need price action and market structure, but these levels give us an objective area to watch if price comes back later. Now, let's go over how we can actually trade with this indicator. The first of the three strategies is retests of support and resistance levels. Well, here are the conditions. For a long position, I want a strong bullish microburst to happen as indicated by the indicator. So we're going to look out for a green bubble printed on a bullish trend like here. When the bullish microburst appears, the indicator will give us a green horizontal level from that area. We're going to extend our level attention forward and then we're going to wait for price to respect that level. I don't want to enter immediately on that microburst candle because price may already have moved significantly by the time the bubble appears. Instead, we're going to wait for a retest. So price should first move away from the green level. Later, when it comes back down, we want the level to hold. Price can touch it with a wick, but it shouldn't break and close below it. Once the retest happens, we wait for a green candle. Once we get that confirmation, we take the long position. The stop loss goes comfortably below the microburst level. The take profit is going to be set at 1.5 times the risk, letting the trade run. And as you can see, the trade would have been profitable. Strategy number 2 is the one I call trend continuation with structural level breaks. Here is how it works. Number 1, identify that the market is in a bullish trend using whatever means you prefer. For me, I'm going to use a trend line. As you can see here, the trend was clearly bullish. And then wait for resistance level to be formed. That happens when the indicator creates a red horizontal line, just like this one, after it printed a bearish microburst bubble like it did here. Once we have that, we just wait for the price to go up and break that level. During the break, the candle that breaks through should also have a bullish microburst bubble like it does right here. You can see this candle is breaking and closing above the red horizontal line and it has a bullish microburst bubble. Once you have that, you know that the probability of the price going higher is higher. No pun intended. So you take a long position, stop loss just underneath the candle, the take profit 1.5 times the risk. And the trade would have been profitable. Strategy number 3 is the trend reversal strategy. Basically, to identify overextensions of the trend, you want to add your RSI. Once you have the RSI, you will be using it to identify overextensions. Whenever the market pushes up so much that the RSI goes above the 70 level, that is an overextension of a bullish trend, and the price might start reversing to the downside. If the price overextends to the downside and the RSI goes below the 30 level, that could mean that the price is overextended to the downside and may start reversing to the upside. Now, to take a long position, condition number 1 is simple. You want to be in a bearish trend, and the bearish trend should be overstretched to the downside so much so that the RSI goes below the 30 level and a red area like this one is printed. Once you have that, you start watching for bullish microburst microburst bubble to confirm that the price is going to reverse to the upside. Right here, you can see this is our bullish microburst. Once you have those two conditions, you take your long position, stop loss below the most recent swing low, the take profit at 1.5 times the risk, letting it run, and it was profitable. Ladies and gentlemen, this is not financial advice. Everything shown in this video is for educational purposes only. Test your strategy properly, manage your risk, and confirm that the setup that you're taking matches your own risk analysis before entering the trade. If you found value in this video, remember to leave a like, and if you want to stay tuned, well, subscribe so you don't miss the next video. Thanks for watching. See you next time.